Welcome to the Explainer. Today we are tearing into Microsoft's absolutely blockbuster Q2 2026 earnings report. And let me tell you, it's a real tale of two extremes. You've got this massive, unbelievable growth being fueled by AI, but on the other side of that coin, as we're about to see, the stakes, well, they have never been higher.
There's really no better place to start than right here with this quote from the CEO, Satya Nadella. Just let that sink in for a second. He's making it crystal clear that this isn't some far-off future promise. Right now, today, their AI business is already bigger than some of their most iconic household names. That's the mindset you have to have as we go through every single number in this report.
So, first up, the big top-line number. It is just staggering. We're talking $81.3 billion in revenue for just one quarter. That's a 17% jump from this time last year. Now, for a company this huge, growing at that kind of clip is, well, it's just a massive signal that the market demand for what they're selling is practically off the charts.
But hold on, because this is the number that really made everyone on Wall Street's jaw drop. A 60% explosion internet income. Now look, anytime you see profits growing that much faster than revenue, it immediately raises a huge question for any smart investor, right? You gotta ask, where did that incredible profit really come from? And don't worry, we're gonna unpack that.
And here it is. This is the engine behind absolutely everything. For the first time ever, the Microsoft Cloud division pulled in over $51.5 billion in a single quarter. To put that into perspective for you, this one part of the company is now a giant that makes up the majority of their entire business. This is ground zero for the whole AI story.
All right, so here's our game plan. First, we'll talk a bit more about what made this quarter so stunning. Then we're gonna pop the hood on that cloud and AI engine. After that, we need to solve the OpenAI equation because it's a big one. Then we'll look at what all this growth is costing them, and we'll wrap up with what the company is telling us to expect and the red flags you need to keep on your radar.
All right, let's dive right into that first big piece, the cloud and AI engine. It's time to really unpack what's firing on all cylinders and driving this unbelievable growth.
Man, this chart tells you pretty much everything you need to know. It's just so clear. Look at that. The intelligent cloud segment is just playing in a completely different league, growing at a wild 29%. It's not even close. That's almost double the next best segment. And then you see more personal computing actually shrinking by 3%. This shows you exactly where Microsoft is placing its bets, and boy, is it paying off.
And if we zoom in even closer, this number shows you the beating heart of that cloud growth. Inside that big intelligent cloud number, Azure and the services around it grew by a blistering 39%. And the company is totally upfront about this in the report. This demand is coming from customers who are all scrambling to build and use AI. And to do that, you need the kind of raw computing power that only a giant like Azure can really provide. Okay, so we've established that AI is driving the cloud business through the roof. But that still doesn't quite explain that mind-boggling 60% jump in profit, does it? To really get the quality of these earnings, we have to solve what I'm calling the OpenAI equation. This is how one single investment managed to supercharge their bottom line.
Yeah, this is the question for every single investor looking at this report. When you see profit growing this much faster than sales, you absolutely have to know if that's real, sustainable, operational profit, or if it's something else entirely. Getting this right is everything for figuring out what comes next.
And here's your answer. It's all right here in the accounting. The official by-the-books profit was about $38.5 billion. But look at this middle column. The company actually breaks out a positive boost of almost $7.6 billion that came just from its investment in OpenAI. Now, if you pull that out, their adjusted profit is closer to $31 billion. Now, don't get me wrong, that's still a fantastic 23% increase, but it's a very, very long way from that headline number of 60%.
So what on earth is this $7.6 billion gain? Well, here's the critical part. It wasn't cash profit from selling more Office subscriptions or more cloud services. No. The company calls it a one-time, non-cash dilution gain. The easiest way to think about it is like this. Imagine you own a big 49% slice of a hot startup pizza. The pizza is so good that a new investor comes along and wants a slice, and they're willing to pay so much that the value of the whole pizza pie just went way up. Now, your slice might be a little smaller, say 40%, but the value of that smaller slice has skyrocketed. You have to report that new higher value as a gain on paper. So it's a huge sign of confidence in OpenAI's value, but, and this is key, it's not recurring profit from running the business.
Okay, so that OpenAI gain shows you the massive rewards that are possible. But there's no such thing as a free lunch. It is time to look at the other side of the coin, because as you're about to see, this incredible AI-fueled growth comes at a very, very significant cost. This slide just lays it all out there, doesn't it? It's like you're looking at two totally different companies inside of one. Over here on the left, you've got the AI boom sending cloud revenues into orbit. But then you look to the right and you see the legacy businesses are lagging. The personal computing segment, which is where things like Windows and Xbox live, is actually shrinking. Seeing Xbox services revenue down 5%, that's a really clear sign that the consumer side of the business is having a tough time. And here is that staggering price tag for AI leadership I was talking about. Microsoft spent $37.5 billion on capital expenditures, and that's in a single quarter. Just to be clear, that's money spent on physical stuff like buildings and equipment. And they confirmed that almost all of that went to buying the servers, the data centers, and especially the GPUs they need to power this AI revolution. This isn't just an investment, folks. This is a massive, all-in bet on the future. And look, to their credit, Microsoft is not hiding the ball here. This quote is pulled directly from their official SEC filing, the legal document they have to give investors. They are telling you, point blank, that the spending spree is going to keep driving their costs up, and it could hurt their profit margins. Basically, the price of admission to this AI gold rush is incredibly publicly high. So keeping those massive costs and pressures in mind, let's turn our eyes to the horizon. What is the company officially telling us to expect for the next quarter? And what are the big red flags that every single investor needs to be watching very, very closely? All right, looking ahead, their guidance for next quarter basically tells the exact same story. They're expecting the intelligent cloud to just keep up this blistering pace, another 27 to 29% growth, but they're also forecasting a pretty big drop in the low teens for that personal computing segment. So that tale of two businesses we've been talking about, yeah, it looks like that's going to continue. And finally, we boiled down the official risk factors from their legal filing into this checklist. This is the stuff Microsoft is legally required to tell you could go wrong. And the list is really telling. You've got intense AI competition. That's what's driving that insane spending. You've got the constant threat of cybersecurity attacks. There's the huge operational risk that they just can't get their hands on enough GPUs to meet demand. That's a very real bottleneck. And maybe the biggest one of all, execution risk. The risk that actually spending all these billions of dollars, the AI bets might not pay off the way they expect. And so, that brings us right back to the one central question that every investor has to be asking themselves after this report. The rewards from this AI gold rush, they're undeniable. They're right there in the numbers. But with these monumental costs squeezing future profits and a growing list of pretty serious risks, you have to ask yourself, is the incredible reward from AI really worth these incredibly high stakes?